Vaishali Siddhappa and welcome to my channel Complemental Economics, and today's topic, that is balance of trade. The question is, write a note on balance of trade. This is one of the 4-mark question. Before explaining BOT, which is balance of trades, I have to explain what is BOP, because BOT is a part of BOP. The balance of payment, it is a transaction of all the goods and services assets in the international market. Whatever the goods and services you are doing a transaction with any other country, any other individual out of the country, that all things will be recorded for 1 year, one specific year, with the rest of the world, whatever the transaction you are doing. So that record is called balance of payment. The balance of payment can be classified into 3 different ways, 3 different accounts. The first one is current account, the second one is the capital account, the third one is financial account. So right now for your syllabus this is excluded, only 2 accounts which they have mentioned, that is current account and the capital account. There is a new classification, actually the classification which I have given right now on a slide, that is a new classification, 3 divides. So this is as per the new accounting standard specified by the International Monetary Fund, which is IMF, in the 6th edition of the balance of payment, and International Investment Position Manual, which is BPM6. India has also made the change, but the Reserve Bank of India continues to publish data accounting to the old classification only. That is the reason why we have only 2 different accounts, that is first one is the current account and the second one is the capital account. The current account what we have, that can be classified into 3 different ways, that is trade in goods, trade in services and transfer payments. Right now the topic which is BOT, the BOT is a part of this. Trade in goods, that means that is BOT, balance of trade. Only the exports and the imports with other country we are going to calculate that. So if you are going to do that, that will be called as BOT. So BOT is a part of current account in the BOP. So these all things will be ignored when it comes to BOT. Only the visible goods, the visible merchandise items will be calculated for the BOT, only trade in goods. So the balance of trade is a part of current account in a BOP, as I just explained now. What is balance of trade is all about? The balance of trade means is the difference between the value of exports and value of imports of goods of a country in a given period of time. Whatever the goods you are exporting, whatever the goods you are importing, everything will be maintained in a record for one given time period, which is 1 year. So that record which we are going to maintain for only the goods, the merchandise goods, visible merchandise items what we are exporting and importing, so that will be called balance of trade. When it comes to balance of trade, so there will be a different account. So if you classify the account like this, one side you will be having a credit, another side you will be having a debit. Whenever you are going to export any of the goods, exporting good, that means you are selling a good. If you are selling a good, you are going to get income. So whenever you are going to get whenever you are going to sell any of the good, you are going to get income, that will be mentioned here. On the other side, imports means purchasing goods from any of the country. So it is the expenditure for us. If you want to purchase goods, that means you are going to spend money. If you are going to spend money, that will be called as expenditure. For foreign country, it is income. For us, it is a expenditure. For another country, it is a income. So that will be mentioned in the part of debit. The imports are going to mention here, and the exports, whatever the value we have, we are going to mention here. So then we can classify again BOT into different ways. So let's talk about the first BOT. The first BOT, you can see here, imports are in the downside. So why it is in the downside? Because the weightage of it is more. The weightage is more, that means imports are greater. Exports are in the higher. So when it comes to its weighing high, the reason is the weight of this export, it is less. So that means exports are less and imports are more. for any country when it comes to trade, if imports are greater than the exports, so that will be called as deficit trade. Deficit trade. That can be called as a deficit trade. Otherwise, we can call it as deficit BOT, balance of trade. And the next one. And the next kind of, here you can see export weightage is more and import is lighter. So here exports are greater than the imports. If exports are greater than the imports, that situation will be called surplus. Surplus BOT. Surplus trade, otherwise surplus BOT. So where exports are greater than the imports, that means income is greater than the expenditure. So in this case, you can see exports are greater, imports are lesser. That means surplus situation where a country expenditure, if it is 50 rupees, the income will be 100 rupees, the extra 50 rupees we will be left with. So that's the reason why it is called surplus BOT. In the next one, I will just classify the balance of trade in different ways, two different ways, which is export and import, the surplus and the deficit I am explaining now. So the first one you can see here, exports are greater than the imports. Export is increasing, import is decreasing. If export is increasing, so that will be called as income is increasing. If import is decreasing, that means expenditure is decreasing. So when exports are greater than the imports, income is the greater than the expenditure. So that will be called favorable. It is a favorable for the country. We have advantage in trade. We have advantage in the trade. It is a favorable balance of trade. At the same time, we can say it, we have a advantage in the trade because we are going to get more money. So this is nothing but this surplus BOT. On the other side, you can see unfavorable balance of trade. What it means? Where exports is less and imports are more. So this is nothing but the deficit BOT. I just explained now the deficit BOT where exports are lesser, imports are greater than the exports. That means a country's income is lesser than the expenditure. Expenditure is leading the income. So in this case, if expenditure is more than the income, that will be called as a deficit. A shortage of money, we are going to face it. It is not good for the country. So it's called unfavorable. Otherwise, even we call it as disadvantage. Disadvantage in trade. So whenever you are facing surplus BOT, that is favorable, and advantage trade for the country, it is good for the country. Whenever you see imports are greater than the exports, that will be called deficit BOT, deficit balance of trade. Otherwise, we have unfavorable balance of trade. Otherwise, we have a disadvantage when it comes to trade. And the next one, here you can see exports are equal to imports. So the situation where exports are equal to imports, that will be called balanced BOT. Balanced BOT. So here exports are equal to imports. The income is equal to expenditure. Exports are equal to imports. Expenditure is equal to imports. If I am getting 100 rupees of income by trading, so I am spending 100 rupees. So they both are equal to each other. So this kind of a BOT, balance of trade, is called balanced BOT. We discussed this. So now when it comes to BOT, the balance of trade is completely narrow, because it covers only, it includes only the visible merchandise items of exports and imports. It doesn't cover invisible goods, it doesn't cover any assets For this reason, we call it as this is very much narrow. BOT, what we have, balance of trade, it is completely narrow because it only covers merchandise, visible merchandise items of exports and imports. On the other side, the balance of trade is only a part or at study of the balance of payment. In short, we can say it like BOT gives a partial picture of BOP, because BOP classified into current account and the capital account. Again, the current account classified into two different ways, that is BOT, balance of trade. Another one is balance of invisible goods. BOP classified into current account and capital account. Again, current account is classified into BOT and balance of invisible goods. So in this we are considering only BOT. So BOT is a part of BOP. So BOP gives a clear picture, where BOT gives only a partial picture of the BOP. So I hope the concept is very much clear. This is only for the 4 mark. With this question, balance of trade and balance of payment, they both are interrelated. Please do watch both together to understand, because maximum concepts of both, it is similar. I hope you understood the concept. Please, if you really liking my video, please subscribe and share. Thank you so much.